All right, everybody, welcome back. Good morning. Thank you for being here. We've got some people waiting on the show, as we do every day. Thank you to the loyals hanging out here. Appreciate you. Uh, Taking a look ahead of what's kind of our last piece of information prior to the Federal Reserve's decision next week to cut interest rates or not. Pretty much locked in. We're going to get a rate cut. Uh, there's not a whole lot of probability that you're going to get something to change that, even with the PCE number. In terms of market volatility, it's not likely to make a huge move in the market, but could, right? We always have the potential for a news event. If it is surprising enough, it can get the markets moving. So we'll see. We also have this morning, we have the University of Michigan inflation expectations as well as consumer sentiment. So you do have some potentially market moving stuff here this morning. Stock market is pretty much flat going into this. If we take a look at yields, they are slightly higher. You have Bitcoin down about 1.5%. We'll talk about that in just a second. Precious metals are up. We have gold up about half a percent, and silver was up about 2% here this morning. So precious metals are on the move. Nice little recovery here from silver's down day yesterday. I think you very well could see when you have price moving like this. It's very possible that you get kind of this breakaway move with hardly any kind of pullback. I'm interested in silver, but it would need to give a larger pullback for me to really set anything up. Nick, how are you? I'm good. Thanks for being here. Gold is hot right now. It sure is. Gold is moving. Good morning, everyone. Happy Friday. Thank you for being here. Good morning, everybody. Yes, thank you for being here. Good morning. Good morning. Wow. Everybody is so cheery in the chat today. I hope you guys have a great weekend, by the way. Friday trading you hear all these things. I remember when I first got started trading, people would always have this like weird, like voodoo, like, oh, don't trade Fridays, or, oh, I don't trade Mondays, or, it's like I don't use this certain slot machine, right? It's like, I don't know. Markets to me are it doesn't matter if it's Friday, it doesn't matter if it's Monday. It matters what the macro says. It matters what seasonality says. It matters what sentiment's saying. It matters what momentum and trend are doing. It doesn't matter if it's Friday, right? People ask all the time, do you stop trading this time of year? Nope, I trade all the time because I'm always watching the markets. Even if I'm not necessarily executing a position, I'm always watching the market. I'm always keeping an eye on what's going on and tracking it through, what we do here on the Edge Finder, right? So I'm watching sentiment data, technical data, and economic data to get an idea of what is moving the markets. Today, we'll get some new commitment of traders data. That will be really interesting to see what institutional players have been up to. Are they buying the dollar? Are they selling gold? Are they buying stocks? We'll get some insights on that with the commitment of traders data, which drops later today. If you've never seen this before, if you're newer to the streams, so what we do here behind this live stream, there is a business. We build software tools for traders. Our primary product, the flagship product, I guess, is the Edge Finder. So we build stuff that helps us to track what is taking place in markets beyond just a price action perspective. We're not just looking at price alone. We also want to consider institutional money flows, crowd sentiment, seasonal trends that can be observed through tools that can help us spot that, macro fundamentals. So what's the Fed likely to do? What are inflation statistics looking like, et cetera. So later today, we're going to get some new commitment of traders data. We get it every Friday. So this will be very interesting to see what we've got in terms of latest COT data. In terms of what we've had recently, we did actually get, we're kind of, this is something to catch up my COT traders out there. If you watch this stuff, we were kind of getting a double X serving recently of COT data, as we are still catching up in regards to the missed prints that took place during the government shutdown. So we did actually, you can track this. You can keep up to date with the latest available figures with this chart right here. We put this at the top so that you can keep an eye on it. So the last available update was from December 2nd, so a few days ago. We had some more data hit the COT data. So let's go take a look at that really quick. So in terms of the latest, The Nikkei, they actually were pretty aggressively buying. Nikkei's been doing really well, especially on a relative basis to the Nasdaq. It's been doing pretty good. Institutions are very bullish on the Nikkei, which is really interesting. The Dow Jones is also interestingly, they're seeing a little bit of accumulation here, although still pretty net short on the Dow Jones. The Japanese yen. This is interesting, right? So we've talked about this a lot. If you've been watching the channel, I've been talking about it. The Bank of Japan, are they going to hike interest rates? The Japanese 10-year bond, the yield is going up and up and up. What's going on there? Well, this is kind of concerning because when you see the yen strengthening, we've talked about it. It is a concern in regards to global liquidity due to the potential for a carry trade unwind. For years, people have sold the yen or borrowed yen essentially to go buy US bonds, US dollars, euros, real estate, stocks, crypto, everything else, right? Recently, and this is why we track this stuff, it seems like institutions are actually buying yen. So we need to watch that because we're seeing something. Again, I keep talking about on the channel. I'm not running for the hills. I'm not selling my whole portfolio. Understand that. But I am not ignoring what's happening with the Japanese 10-year bond. It's rocketing higher to, I believe, its highest level in history, or at least close to it. Look at that. The Japanese bond yield is rising dramatically. And what this does is it puts pressure. This is very bullish for yen. It puts pressure on global liquidity because people who are borrowing yen, but now their borrowing rates are going up, what are they potentially more likely to do? Unwind that trade, buy back the Japanese yen. This is really critical stuff because, again, believe it or not, rising bond yields can be a real big issue for global liquidity, especially with Japan. So when it comes to the commitment of traders data, the Japanese yen, there's some accumulation going on. And I think it's interesting. From a bigger picture standpoint, let's see if we can see that through the COT data history. I'm going to go over here. I'm going to look at JPY. And you can see it's actually been decreasing in bullishness, but remember that COT data is filling in now. Like we're catching up recently on some old data with double time reporting. So you can see, like, I know this is kind of hard to see on your screen. We had some data November 19th, November 21st, November 25th, December 2nd. Like, we are getting a lot of COT data kind of pouring in. And at least in the latest filing, which we'll get another one today, right? Japanese yen buying took place. We want to watch this. Again, I'm not running for the hills. I'm not, saying the Titanic is sinking by any means. But we should not ignore what's happening in institutional money flow, because if the yen keeps getting bought aggressively, and probabilities for the Bank of Japan to hike interest rates, if that seriously rises, it is an issue. Can I show you one move really quick? I think it's important that we discuss this. So let me see if I can find it here. Where is it? Where was I going to go? Oh yeah. Let's go S&P 500. Let's go NASDAQ. Okay, so if I go back to this move right here, this move was pretty nasty. The NASDAQ made a drop in, like, what is this? Like 1 month. Sorry, I can't see behind this thing. Hold on. Let me just adjust this. So the NASDAQ in like 1 month dropped 17%. This, if you remember, was in response to Japanese yen carry trade unwind. So the Japanese yen, Japanese carry trade, right? Japanese yen, whatever. The yen carry trade is a real thing to markets. This happened because people were real worried that that unwind was going to accelerate. And we flushed 17% down in a month on the NASDAQ. So it is of concern. It's something to watch. And it matters a lot to the market. It's not a nothing scenario. Now, I don't think it necessarily is something to panic sell right now on. I'm just saying we want to keep an eye on that and be aware that that could take place. People are saying the Canadian dollar is moving. Yeah, I think we had some, well, CAD yen is up. Dollar CAD is down. CAD is strong here. Let's go. We must have had good employment data. I've got some long positions on the CAD. So CAD employment data. Look at that. Very nice. Congrats to CAD Bulls. Employment change here looking really good. Beat expectations by 50,000 jobs. Not too bad. Unemployment rate came in at 6.5% compared to 7%. Canadians, what are you guys up to up there? I thought you guys just like played hockey or something. Kidding. That's awesome. Well done. Well done, my Canadian neighbors. 6.5% unemployment rate. Not too shabby, huh? Employment change came in 53.6. CAD, how you doing this morning? Looking pretty good. CAD yen pushing it to the upside here. Euro CAD coming down. Aussie CAD coming down, even though Aussie's been strong. Dollar CAD, look at that. Very nice. CAD employment strong. That's the takeaway. Very nice. I'm long CAD Swiss. I've been sitting in some really boring trades for some time on this one. I have a really boring long-term approach to Forex that I have long positions on the CAD, so I'll take it. I'm sitting in drawdown on this one, so it's not a glamorous scenario, but these trades are tiny, and I'm just, I think there's longer-term upside to commodity currencies like CAD. Anyways, back to where we were talking about this. Where was I? Oh, yeah, we were talking about the yen. The yen recently has been seeing a little bit of an uptick. I think it's worth keeping an eye on. I don't think it's worth freaking out about the Japanese yen stuff. But you know who is freaking out? Bitcoin. Bitcoin hates this. Bitcoin hates less liquidity because it's a risk asset. Again, call it what it is. Bitcoin is a risk asset. It does well in excellent environments and it does horrible in bad environments. And candidly, here's the biggest criticism I would give to crypto people. Crypto has never seen a real bear market. Now you might say, well, yes, it has. Crypto's had terrible bear markets. Now, I'm not talking about a crypto bear market. I'm talking about an actual bear market with everything down for multiple years. Bitcoin has never existed during that time. 2014 till now has been an excellent. You couldn't have asked for a better stretch of time for Bitcoin to be born and lived in. It's lived in an incubator for its whole existence. Now, I'm not a crypto bear. I'm not. I really am not. I think it's a very cool technology. I think it's sort of like the internet. Like, I think things can get overhyped. I think it can get, but it'd be an incredible technology that maybe goes on to be something bigger over time. What I do have concerns about with crypto is if you're just a buy and hold crypto person, like there is a tail end risk that I don't even think a lot of crypto traders even have any idea about, because they've never lived. I haven't lived or traded in a true bear market, like a 2008 type of bear market. Do I think that's coming around the corner? No, I really don't. Eventually it will happen, though. It's inevitable. You can say it long enough, eventually you'll be right. I don't think it's necessarily coming around the corner, but when it happens, crypto is a huge question mark. Like 90+% drawdown in crypto is entirely possible if you had a 2008 scenario. In fact, I wouldn't be surprised if it's down 95% in that environment. 95%, just for context, would put you at like $5,000 Bitcoin. That sounds impossible. But 2000, for example, go look at the Qs in 2000, right? This is the NASDAQ, which was unbeatable at the time. The NASDAQ, the beacon of technological advancement. People did not think this thing could do this. and it proceeded to drop. At one point, the NASDAQ, the whole dang thing, dropped 80%. Okay? So it can happen again. Never say never. It is how you lose everything in markets. If you believe, oh, now that will never happen again. Well, if it does, and probably when it does, might be 20 years from now, might be a year from now. We don't know. You need to be prepared for those types of scenarios. And nobody wants to talk about that stuff because that's not fun to think about. That would be devastating for people. But it doesn't mean it can't happen. We need to be open-minded. This is why I'm big on no leverage, right? I'm big on no leverage because I want to survive anything that comes at me in the markets. And if I put leverage on it, there's a much higher probability, even with a little bit of leverage. If you hold a little bit of leverage long on like Bitcoin and you get a true down market, you'll lose everything. And people won't talk about that because it's not fun to think about. But financial markets, there's no gain without pain. And if you have never experienced true pain in markets, you just please be careful. So when it comes to trading, I'm a big fan of low risk trading. I'm not a fan of, huge leverage and buying out of the money call options with your whole portfolio. I'm just not into that stuff. I'm into sustainable, let's do this for 50 years together type of trading. And that's the goal. Anyways, Bitcoin from a technical trading perspective, not from an investment perspective for me, I'm looking for this kind of move. If we can get a break through this level, pullback, I like it with a stop loss. And again, this is my kind of thesis with Bitcoin is I'm not really a buy and hold forever type of person with crypto. I'm more of a trader. So if we got this type of move, I really like that setup for a good risk to reward. I think you could have a nice upward side move for Bitcoin, right? If you got this kind of move to the upside, any sort of retest of this area, to me would be a good risk to reward setup. I'm watching for the breakout. We have not quite had that just yet. Can we look at Bitcoin? I'm just curious what's been going on. Crypto's been pretty mixed here, about 50-50 in terms of institutional positioning on Bitcoin. Let's see. We do get, like I said, we get some fresh commitment of traders data coming out on this afternoon. So stay tuned on that. We'll see what institutional money has been up to there. By the way, I should just mention today, we are ending our Cyber Monday discounts. If you want access to the Edge Finder, don't miss your chance. This is the last call on that. Cyber Monday, we're doing 45% off for live stream viewers here today. We are also offering payment plans if you need them. So if you want access to Edge Finder, last call on this. I know a lot of people wait all year long for these discounts. Don't have FOMO. Buy the dip on Edge Finder. The dip is ending and we're about to rally back. Okay. The price of Edge Finder is going back to its usual price. So last call on this. If you want some information on how you can get access to the 45% off discount for our Cyber Monday deal that we extended through the end of the week, we'll drop a link here in the chat to where you can speak directly to a member of our support staff about getting access to a copy of the tool. Alternatively, you can scan the QR code that is below me. What that will do is that will connect you to a real person on our support staff if you need that. I'm just going to drop the link here. So, boom. Okay, so message here if you want access to that 45% off Cyber Monday deal. Don't miss it. Here's the 3 things you can get access to. I know I'm mentioning Edge Finder, but you can also get access to the stock box, and you can also get access to our VIP room if you want to join the trade alert service that we offer with verified traders. Marco literally just passed a DNA funded account, so he is adding that to his roster of funded accounts, which is pretty awesome. So you get all the trade alerts that we're sharing inside of the VIP room. Whatever you want, last call on it. There's the Cyber Monday discount. Actually, I actually have FOMO, fear missing out on this amazing deal. Shout out to Emily. Yes, shout out to Emily indeed. She does a great job helping people with setting up plans or whatever they need to get access to the group. So yeah, speak to Emily here. She is at the ready to help you guys. So yes, we have about 40 minutes here before we get this collection of data. We have the University of Michigan's consumer sentiment and inflation expectations, as well as core PCE, which is going to be sort of our last inflation measurement before next week's Fed meeting. Hey, Nick, hope you're well. Hope you're well as well. Hope you're well as well. Thank you for that. What's up, Gibbs? Where are we in the put to call ratio for SPX? Let's take a look. See what we got on market sentiment put call ratio. Drum roll, please. And we are still the reigning champion. SPX call volume still very high. So we have crowd sentiment, and actually, I gotta say, we talk about when it comes to sentiment, sentiment has definitely flipped bullish. Let me show you. So first of all, when we were down here, everyone was a bear. And I don't mean actually everybody, but the majority of traders in my comment section, oh my gosh, I made a jab at the bears today. I had to. They dropped like 1,000 comments on my YouTube channel. This idiot, he's long. I get the personal insults. When I get the personal insults, I'm not gonna lie. This is how I know. I don't know. This is how the probabilities that we are at a low of the market are getting more extreme and in favor of an upside reversal. People comment the nastiest thing. Like bears, I think there are in this world, there are people who are bearish in the market who are very logical and very responsible and tactical, and they have a reason for being bearish, and they set up a trade and they acknowledge when they're wrong. But that's like 1% of bears. 99% of perma bears are people who, when the market does this, they flood into YouTube comment sections, and it's like bears coming to hibernation. They are loud, they are obnoxious, everything's a Ponzi scheme, everything's a lie, it's all falsified, the market's going to crash, Trump's going to ruin the market, Biden's going to ruin the market. That is the mantra of the bears. And guess what, man? It's like fighting with someone who will never admit that they're wrong ever. It's pointless, because what they'll do is they'll come in and flood the comment section. This idiot, he's a perma bull, he's buying the market. By the way, I took losses over here. So I'm not saying like I did this perfectly. I took a loss over here and then I re-entered and this trade worked. What I'm telling you is that I'm not perfect by any means with my trading, but these people will come in and they are like so, aggressive. They're like, oh, you're an idiot for being long. It's a tech bubble. It's all going to crater. It's all going to crash. And then what is so infuriating about it? It's like when a conspiracy theorist or somebody who never admits when they're wrong, and then they're met with facts, like facts hit them straight in the face. The market goes up, and those same people disappear. Poof, pixie dust. They're gone. Tinkerbell, right? They're just, and they never come back and say, hey, you know what? I'm sorry about the horrible comments that I was leaving on your YouTube channel, right? Like, I've done this for long enough. It happens every time. Every time the market drops, the bears come out and say, I told you so. I told you so. They say it over here, and then they disappeared. And then right here and right here, they came back and said, I told you it's going to crash. Boop, goes back up. It's incredible. It's incredible because you know what? Like, I know I'm kind of being, snobby back to them right now, but let me tell you this. I'm not even kidding. To a T. When they get super loud in the comment section, the market's bottomed almost every time in my YouTube's history. Over here, I pulled it up the other day. I literally went back and read comments from this time. They were nasty, man. Nasty. Like, you're an idiot. Like, it's a dark crowd of people. The perma bears are not happy people. I'm not saying that there's no valid reason to be concerned or skeptical or bearish in the markets. That's not what I'm saying. What I am saying is that most people who are in that mindset have missed out on the market's move, are bitter, angry, they've lost money in the markets, or even worse, like I know that's coming from a point of pain. That's why they're so bitter. The markets come down, or they sold all their stocks or something like that. Like for example, I've also had, to be fair, people who have come back and apologized, people who have been like, yeah, what happened is I lost a ton of money and I felt horrible about it. So I was nasty and I was in a dark place. Markets do that to people. I understand. Like, I get it. It's not a very nice place. The markets are not kind. They are pretty ruthless. And having no accountability to yourself in the markets is a quick way to become very bitter and very angry with markets. Nick, just ignore perma bear and disrespectful people. Don't even worry about it, man. Like, I've done this for long enough. I actually pay a lot of attention to them. You know why? This is going to sound like just such a jerk of a comment, but genuinely, when the comment section gets real nasty, it's a signal. Like, yeah, it's a real signal. And not even, I mean, we have the tools to track this. I'm not even kidding. It's a signal that I genuinely trade off of. Like, my comment section is an anecdotal example of it, but we have the put to call ratio for this exact reason. We track crowd sentiment because crowd sentiment is powerful. When you have, and also I don't know why our price chart is not showing up on here. I'll get that fixed. Let me write it down for our projects of the day. Put call prices missing. But we have the put call at the bottom, so that's what matters. Okay, so right now, at least, we have crowd sentiment that is more positive. And we also saw this yesterday with the AA investor sentiment survey actually flipped bullish. First time in a while here, we've got more bulls than bears. The bulls are back. Now, does this make me nervous? Kind of, but not necessarily in a sense that I'm going to sell my stuff, right? I'm not going to get short or get bearish just because we have had bulls come into the mix. Okay. There are still bears out there. It looks like the bears are capitulating. The bearish crowd has been wrong, and they are starting to flip into the bull camp. Now, where that does start to get me a little nervous is that if we start, flying through the all-time highs, which I think we are headed towards, if we fly through the all-time highs and crowd sentiment starts to get really bullish, what will I do? I'll keep trailing that stop. I'll manage the position that I'm in. I went long over here where crowd sentiment was terrible. So although I am joking and kind of teasing the bears in the audience, first of all, I do want to say that if that's ever been you, I'm a human. I get comments from a lot more people than there are of me. And it does, stack up. It's like when you get like flooded with, we work all day on a video and a bunch of people like leave a bunch of nasty comments. It's not fun, but I recognize logically that a lot of those people are in a really dark place. They've lost a lot of money. They've hurt, their financial situation through the markets. I get it. Or they're just, maybe some of them are just genuinely not very happy or nice people. I say this candidly and seriously, it still is an indicator. The contrarian indicator of the crowd is something that I really use a lot in my trading. When everyone freaks out and sells, it creates bargain prices. When everybody gets bulled up and euphoric, it creates premium prices. It's a simple concept. That, in combination with macro, has been my bread and butter the last few years. If you watch my streams enough, I rinse and repeat this stuff. If you watch me with some time, you will know pretty much my strategy and how I trade. It's not a secret. It's not a black box. It's transparent. I don't win every trade. I have calls that are terrible. I have a lot of calls that are right. Nobody's perfect in markets, but you will, if you watch my streams every day, you'll figure out exactly how I trade. I use sentiment, I use technicals, I use fundamentals. A combination of the three. The Edge Finder is rooted in the center of it. Last call. We're going to throw over the stream here to Forex James in just a second. This is it. 40, 5% off the Edge Finder, Stock Box, or VIP group for our Cyber Monday discount. We extended it through the end of the year. I'm sorry, through the end of the year, through the end of the week. Take advantage of it. If you resonate with what we're talking about here, take the leap. Stop wandering aimlessly. We have verified track records in the trading group. I wouldn't sell something that I wouldn't buy myself. Explore it. If you need a payment plan, use this link to speak directly to a member of our support staff so that you can get yourself some tools or education if you join the VIP group. With that said, upcoming, we've got Forex James taking over the stream. Stay tuned. Don't go anywhere. He's going to talk some trading setups just after this quick break. Hey, stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream.
Okay, we should be back. Sorry about that, guys. My bad. Just let me know. Are we good to go? Can you hear me now? The settings says all good. Good. Perfect. Sorry about that. That was my bad. Something happened in my system settings for some reason. Anyway, happy Friday, guys. Hope everyone's had a good week. Hope you've all made some money before Christmas. You've got the money to buy those presents. Break down egg USD. Yeah, sure. I mean, eggs not a bad investment from what I've seen recently. US eggs, anyway. Something about PCE. Make sure PCE numbers come out good or positive. I'll do my best. I'll sway my influence over to the US. So as I was saying, but I was muted, there's not really anything going on my side of the markets or on my side of the trading. So I'm kind of just sat really in pound Swiss still, currently moving against me a little bit, but it's coming into a area that I'm looking to scale in again. So I've got 3 short positions on pound Swiss. I'm looking to continue to scale in. My exit will be if we start breaking above this 200 moving average. That'll be my cutoff point. If we come up to the 200, I'll add in one more position with a hard stop, move all stops to that just above 200. If we see rejections, cool, we can come down, continue this downtrend that we've been in. But yeah, it's not a large position by any means, so I'm quite happy to sort of sit. Unfortunately, I am paying swaps, which is a little bit annoying to sit through a DCA position when you're paying swaps, but that's part of the job sometimes. And silver hasn't done really anything, so I showed you guys yesterday, but I've got loads of buy orders through silver, pretty much every $2 down from 50. So yeah, I'm sitting in that, but again, they're all pending. But yeah, other than that, I'm pretty flat. Oh, and Aussie New Zealand as well. I forgot about that one. So this is the Aussie New Zealand position. I scaled in yesterday because it's the only short-term trade I've got. So I decided to add a little bit more risk because the position was continuing to be positive. Really nice rejection of the fib. Pretty nice break and retest here. And we had the balance of trade come out positive for Australia yesterday as well. So it seems like quite a good trade, but yeah, we'll see how it goes. Swiss is weak. I don't care in the most respectful way possible. I'm not trading it because of the Swiss. I'm expressing a short sterling idea. And the overall trend on pound Swiss is bearish. So it's one of those markets where, yes, it might see some fluctuations in the short term. Long term, it's fine. I'll let it run. Pretty much every pound pair is looking quite nice to shorts. Pound CAD's not the best in terms of technicals, but shorts on pound CAD line up quite well. Pound Australian look nice as well. Pound Swiss is really, in fact, pound yen and pound Swiss are kind of the only ones that are seeing a little bit of upside. Pound New Zealand's down. Pound dollar is not doing too much. Actually, it's pretty much sideways. But yeah, there we go. Short silver and gold till start of next week. Interesting, Chris. Put to call ratio is high and edge finder score drops back lower. Yeah, fair enough. If that's your view. Naz is going crazy. Yeah, we just had market open, didn't we? Let's take a look. What have we got? Adverts on TradingView. Yeah, really strong market open actually, which is nice to see. Yeah, nice. So it'd be good to see a nice strong stock market into January, February. Then I'm going to close out some positions in terms of stock portfolio. Follow the sell in May and go away, or whatever that saying is, and then look to reallocate during that period at some lower prices. If we do get that, that's sort of just a what do you call it? It's kind of like the Santa rally or the December rally, whatever you want to call it, but it's the opposite in sort of the May period, where typically we can expect stocks to start heading to the downside and slightly. Core PCE USD going to fall, EU going to go up? Any idea? Let me have a look. Let's see what the forecast is. I'm not even sure what time it's meant to come out. Just bear with me for a second. Okay, so we've got about 20 minutes, and we have PCE month on month, PCE year on year as well. What else do we have? Consumer sentiment index as well for the US. Yeah, there's quite a lot coming out in about 20 minutes. So if you are in any positions regarding the US, whether it's the indices, equities, or currency, take care. Forecast is at 0.2. Previous was 0.2 as well. On month, year on year forecast is 2.9. Previous was also 2.9. So it'll be interesting to see what we get. Sorry, my cat's just moving. So yeah, I think I'll be on stream for that. It'll be just at the end of my segment, but I'll see if I can cover that with you, and then I'll jump off the stream. I don't like short metals either, but I think it's going to continue to range till Fed next week. That is a possibility. Although it is expected the Fed's going to cut rates. I tweeted actually, was it yesterday or the day before, that the likely scenario, or at least what I'm thinking is, I mean, this is a daily time frame. Let's go down to like the H1. If TradingView will load. So because the market's heavily priced in, it's widely expected we're going to get a cut by the Fed. I think it's roughly 90% probability on CME on the Fed Watch tool. So if the markets are pricing in an event, let's say, this is just hypothetically, let's say this is the market price level on the Fed decision. We get the decision. Everyone's been pricing in and expecting that cut. What do you think is going to happen? Well, you're not going to pile into more shorts on that cut. You're actually more likely to start taking some profits. So we might see the sort of sell the rumor, buy the news situation. But in this case, it would kind of be the opposite. So you'd be looking for short-term upside. Then obviously you get the press conference, which is obviously forward guidance. Then I would expect the dollar to continue lower. Again, I'm basing that idea on, as we've already discussed, the Fed is expected to cut rates. That's not a surprise to anyone if it does happen, as well as the SEP, the dot plot, and the Fed Watch tool as well are all suggesting that we are going to see further cuts into 2026. So I wouldn't expect Powell to take a solidly a solidly hawkish stance to necessarily bring in significant buyers, but short-term buys and then continuation to the downside is my current opinion. I want to say short-term upside, I mean very short-term. I'm not talking hours, I'm talking possibly 10-15 minutes of buyers, or at least some short-term upside anyway. Short-term metal is really digging your own grave. Well, yeah, kind of, but no, it depends, really depends, especially if you're expecting a range-bound market. Then buyers and sellers can make money at the same time. Generally speaking, in markets, and this is very, very blanket statement, it really does depend, obviously, but buyers and sellers can make money at the same time in the same markets because there are many different approaches. So, for example, at the minute, I'm short Eurodollar on a DCA, meaning I've got, this isn't obviously Eurodollar, but I'm just doing it for example. I'm shorting this, for example. The idea is just to catch these pullbacks. I'm not looking for a trending market or a massive move. I'm just looking to dollar cost average in, bring up an average price, and then benefit from any type of pullback or reversion we have, which does happen very often on Eurodollar, and it's obviously positive swaps for sellers. So yeah, if you are looking at this range and you think that, whatever the reason is, shorts can come into play, cool. I don't see a problem with that, especially considering that we haven't really been able to break structure to the upside significantly anyway for quite some time. I think it's relatively reasonable. How are you so handsome? I don't know, to be honest with you. I think it's just a skill gap, just one of those things. You got to looks max. There are some people still waiting gold to drop below 3,500. It's insane. The thing is, with metals, it can be very unpredictable. Obviously, in hindsight, you can say, gold's been easy. All you had to do is buy. But we could be sat here in 6 months' time saying exactly the same thing. And let's say gold's gone up to 5,000, maybe even higher. We could have been saying, oh, this was an obvious buy. But we'd be talking in hindsight. It's exactly the same thing as saying it, down here, for example. So what my point is gold, metals can have very, very strong moves to the downside when it decides to do so. So like, you could have been buying here and saying, people still think gold's going to go down to 1,000, which it did do. That's a large move, especially from 1,700. That's a $700 move to the downside. So yeah, it's possible, but I would say it's unlikely to happen. I don't even know if I want to put a time on that. that could be my last words. British tea, chips, and fish fingers. Fish jeans. Oh, you know what's funny? I actually don't have any British jeans. In fact, no, that's a lie. I'm about 5% British, and that's it. I'm 43% Vietnamese and Chinese. It's like a split between, I'm not sure which one. And the rest of it's all weird places. I've got like a bit of Switzerland, Norwegian. I've got a bit of Thai. I've got all sorts. I don't know how it happened. I'm like maybe a test tube baby. Anyway, do you leverage? Yeah, of course I use leverage. Most traders do. And if they say they don't, then they must have large capital. I want to say large capital, I mean very large capital. I don't really see a reason to not use leverage. It's one of those things. If you have access to leverage, you have access to a tool that can be a huge benefit, but it can also be a huge detriment and a huge problem if you don't know how to utilize it. So using leverage, I'm not going to go into what leverage is and things, but you've just got to be very, very careful on making sure you use it as a tool and not as what's the right word? As like a taken for granted thing to use for gambling. Does that make sense? Buyers make money, sellers make money, pigs get slaughtered. That's exactly it. I noticed Nick has a bit of a grudge against the bears at the minute. That made me laugh. He put a tweet out yesterday, I think, talking about bears, or early this morning or whatever. And I came into the stream waiting to come on. And I hear him talking again about the perma bears. Made me giggle. I was going to hold my gold buys, but I just closed them at 42.40. Been holding buys, and it keeps bouncing off this range. I prefer to re-enter long, but near 4,200 makes sense. Yeah, I think you can take two stances on the metals, which I've taken one, which is obviously a long-term view where I'm basically just buying, again, as I said, those $2 intervals on silver. You could essentially do a similar thing. I'm not telling you to copy that. Obviously, that would be very risky if you don't know what you're doing. But you could take a long-term view with low-risk positions and just let them run. Or if you're, a shorter time frame, more active trader, then yes, it might be a little bit difficult to try and navigate this, because although technically we are moving to the upside, it's a little bit tricky because we've created this double top here. Well, it's a really big box, but you get what I'm saying. We've created this double top here, and we continue to fail to break above. So now it's like the inflection point. Are we going to break above? If so, likely outcome is we come back up to here, and then we see maybe some more profit taking into the end of the year as people flatten positions. I could be completely wrong. Don't take that as gospel, but that's kind of what I'm not expecting a huge move on gold or any markets really at the moment. Remember, as December progresses, liquidity depletes really in the markets. So the further along we go, the less movements we're going to have, generally speaking. British dead internet theory. I'm going to try not to take that as an insult. Only took 5 years for that price drop. Yeah, that is a good point, Chris. Yeah, probably should have mentioned the time frame. When you show up every day, you tend to get comfy. I'm not sure what you mean. Holding buys from 39.40. Very nice. Sellers stocks. I can't do that, unfortunately, my friend. I don't have the the regulation or the company to sell you any stocks. There's no bubble. I would say there is a bubble, to be honest. I think it's very difficult to say there isn't a bubble. As far as I'm concerned, I would go as far as to say that there objectively is an AI bubble. I mean, if you just look at it from not necessarily a trader's point of view, but if you look at what AI is doing and what's going on with AI, just from a normal person's view, not regarding markets, AI is getting put into everything. I'm not saying that's a bad thing. AI can be a great use, but there are things it doesn't do well, and to be honest, this is a little bit of a personal gripe, but I don't think AI exists. I don't think it's a real thing, because as far as I understand, and I'm not a technical guy, I could be completely wrong, but AI is obviously artificial intelligence. We don't have any artificial intelligence. We have language models that regurgitate what Google has already got. So as far as I'm concerned, we don't actually have any real or true AI. And it's incorporated into everything, and sometimes quite needlessly. It's replacing people. Then AI is getting replaced with more people because it can't do the job properly. Things like, sorry, my cat's scratching my desk. Things like, what was I saying? I can't remember where I was going to go with that. But yeah, I think we are in a bubble. I mean, if you look at the investment flows from OpenAI, it is essentially a bubble. It goes round in a circle. Anyway. I like a Mexican with a mustache. That's not the vibe I was going for, but I'll take it that as a good thing. Mexicans generally are quite good looking. How much of an impact will news have on gold? That's very difficult to say without the data. If it's a massive miss or a massive beat, it could have a big impact. If it's on target, then very likely pretty much nothing. So I can't tell you that. In terms of the impact of the news, it is red folder news. So it does have the potential to be quite market moving, but again, I can't tell you by how much because I don't know what the data will be. In order for us to have AI is for AI to develop AI. Yeah, kind of. But again, I don't know how like a real AI would even come about. I suppose I don't know. Anyway, I'm not going to go down that. That's more of a whatever. I don't think AI exists. No, I don't. I don't know if that's a stupid or an ignorant point, but I don't. I've not seen any evidence of true intelligence from AI. Again, it's just regurgitating things and rewording things, which we could all do on our own with Google. Anyway, let's talk about markets because we have been here for 20 minutes and I've not actually told you anything really about markets. So on the Edge Finder, we've got euro dollar reading bullish with a score of 11, New Zealand US dollar reading bullish, euro yen also very bullish. So euro yen, New Zealand US dollar, euro US dollar as well. That could all be in the basket or in the watch list for longs. Regarding euro dollar, I wouldn't like to be a buyer just yet. If I was to be a buyer or I was looking to be a buyer, I would want to see a pullback towards the moving averages. I'd need to see this sort of reversion, then potentially go for longs, then possible scale in on a break and retest here, and then let it run up towards 1.2. I think that's the sort of least resistance path. Because if we look at what's going on, price is really struggling to break above, let's say in between 1.1 or 1.16 and 1.16, struggling to break out the 1.16 zone. So if we can break above that, I think we are pretty much smooth sailing up to 1.2, as long as the fundamentals continue to be supportive, of course. PCE in 10. Yeah, I will try to go with PCE, but I don't think it should be an issue, but we do have a guest coming on after me. So I don't want to run into their time as I did yesterday. Closed gold longs now. It wants to break out. So there's coming. Chris, stick to your plan. Sorry, just want to bring it back to the AI. What are your points? What are your points on screenshot AI signals people are using? Absolute garbage. It's the most useless, brain dead, idiotic thing anyone could ever do. I think if you are taking screenshots of a chart and you need to put it into a website to say, oh, it should buy or sell, first of all, you're not a trader. You are quite literally a gambler. Second of all, you are absolutely clueless and you shouldn't be in the markets in the first place. You need to go and hit baby pips. I think it's a tool for people that don't care about trading. They have no interest in actually learning how to trade. All they want to do is make money. And there are much easier ways and much more reliable ways to make money than relying on some screenshot for AI tool thing. Because all it's doing is seeing what you've got, and it will use like a what do you call it, like a pattern recognition thing. It will already have some sort of strategy in mind, whether it be a break and retest or moving average cross. It'll have some sort of basic idea of a technical strategy. It'll try and apply it to your chart, and that's it. The ones I've seen anyway don't account for anything regarding fundamentals, real trend. I could screenshot this, but then is it going to account for the monthly trend? Does it even know what assets I'm looking at? Probably not. So yeah, I know that was a bit of a long thing. I went off the rails a little bit there, but I think AI is good for trading if you know how to use it. If you get something like the Edge Finder that has AI built in, it's specifically for trading. It's got its own data, obviously the economic data, so it's quite reliable. But again, if you're using something like ChatGPT, it doesn't have market data, or it doesn't have live market data. So I guarantee if you go to ChatGPT now and say, what's the price of GBP USD, should I buy or sell? It won't be able to tell you, or it will tell you, but it'll be wrong because it doesn't have the data. So again, if you've got a specialized AI from a reputable source, then fine, that's good. But general AIs and these dodgy screenshot things are an absolute waste of time. Nick always advises against using leverage. Well, it's, in my opinion, it's preference. I think Nick's at a point where leverage probably isn't going to be as relevant for him. Obviously, if you're trading with, or you've got millions to trade with, leverage isn't going to be as big of a resource for you as someone with a $500 or $1,000 or whatever it may be. So, oh, Marco used ChatGPT. Well, maybe I'm wrong. Thing is, I did two YouTube videos. It was a 2-part series of doing a back test with ChatGPT. In the first video, it actually did really well. I think it did like 6 to 7%. I can't remember actually off the top of my head. And then I did a follow-up video to see if it was like a lucky streak or like just a lucky streak. Well, sorry, if it was a lucky streak or if it was actually good. And in the second video, it lost all of it. So that's my experience. But, you know, maybe it's been upgraded since then. I don't know. But again, it's my opinion. It's not fact. So what else we got? Pound Australian, pound New Zealand, both bearish. Pound Australian, I'm a bit salty I missed this trade. So to recap for some of you, we were looking at this. We were waiting for this pullback to the fib, which was between the 0.8 and the 0.618 and the 0.5, and also to fill this gap. We got it. I didn't enter the trade, which I was really annoyed about in hindsight. However, I don't see any way into the market now, unfortunately. I suppose you could maybe wait for some sort of retracement from here, but to be honest, yeah, I don't see a way in here. We are essentially just sideways. So what was the other one? Was it pound New Zealand? Oh, pound. Wait, hold on. Sorry. Yes, pound New Zealand. So what do we have here? Kind of the same thing. A little bit cleaner in terms of price action, but I'm still not seeing much of a way in. So yeah, unfortunately, the two bearish assets, I don't see an entry. For Aussie US dollar, which is on the list for being bullish, I would love to see this, which is a retracement back towards the fib, towards the 0.5, 0.618, retest these moving averages somehow, then continue higher. That would be good. But again, that's in a perfect world. But the key thing for me is actually avoiding trading at the minute, because as I said earlier, as December comes, I know we got news in a minute, don't worry, I've not forgotten. As we progress into December, we can also see a decrease in liquidity over time. So I'm not really that interested in going into new positions. So we've got a minute and a half until news. Market. Yeah, I mean, that's exactly what I mean. If you've got a specialized AI that's specifically for trading and it's been given reliable information, then that's not the problem. What I was talking about was just ChatGPT on its own, or these the tools you see on Instagram Reels or TikTok, where you take a picture of your chart and you give it to this AI thing and it tells you to buy or sell. That's what I'm talking about. I'm not talking about the specialized AI tools. What does this mean, James? Explain why lower liquidity in December is undesirable. So as we go through December, what you will see is kind of like the summer trading period. Actually, it's sort of the same concept. In fact, it is the same concept. So as we approach major holidays, so global holidays like Christmas or the summer period, we often see the institutional traders, the floor traders, people are actually putting money in the markets and creating the movements and the trends, start taking time off. They will step away from their desks. People aren't placing that many more trades. The money in the markets isn't flowing as much. So generally speaking, we're not going to see the market moves we need. So that can lead to unpredictable moves. It can also lead to situations where things that normally wouldn't be that impactful could be slightly more impactful, because again, the liquidity isn't as thick or as much. And generally the direction is just not going to be as clean. Now, there is no time limit. Hold on, news. Where is it? Oh, it's releasing. So PCE year on year came out at 2.8. So slight decrease there. Let me pull a dollar index up for you guys so you can see that. So yes, year on year decreased 2.8, and the month on month stayed the same at 0.2. Very little reaction on the dollar. In fact, pretty much no reaction on the dollar whatsoever. Sorry, I'm just making sure this is updated. Yeah. So PCE year on year is actually a bearish factor for the dollar, bullish factor for the indices markets. But again, very little movement from that. Anyway, ladies and gentlemen, I'm going to head off because we've got, I think it's Marco coming to take over the show. Guys, enjoy your weekends. Enjoy the rest of your days. Thank you for being here, and I will see you all very soon. Stay safe. Don't get margin called.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the live stream. I hope everyone is doing well. So the big news for my personal trading for today is that I've actually passed a DNA funded challenge. So essentially, I had the stage 1, I had the stage 2, and I passed the stage 2 this morning. I can show you. So if we go to here, this was stage 2. This was stage 1. Okay, let me just see an email. This was stage 1 plus 10%, stage 2 plus 5%, and this is the actual final account currently running plus $187 in profit. So I do have 2 positions. One is a sell on euro dollar, one is a buy on the SPX500, and both of them seem to be in profit right now. So I know you guys are wondering about the challenge. I know you're talking about it in the comments. This is solely influenced by AI. So I'm only using ChatGPT trade signals to actually trade this challenge, which means ChatGPT made around 15% in the last, I would say, 2 to 3 months. I think you're also wondering, well, what is the original prompt? So here it is. This was the original prompt that I gave ChatGPT. I also have a full video on this. It's a 3-part video on my YouTube channel at Marco's Trading Journey. But essentially, this was the original prompt. So we are going to play a game for the next 30 days. We will battle it out in the financial markets. I will give you instructions each day at noon, that is London time, to take trades that you find high probability, and then we will compare your results to mine at the end. So let's start today. You will take 2 trades. It can be a buy or a sell, one on the SPX and one on a major currency pair of your choice. Simulation involves opening a trade today and closing it tomorrow. I changed that. So I changed it later on to using fixed stop loss, fixed take profit, and I don't close the trade prematurely. So I just let it hit the take profit. I let it hit the stop loss. And then you need to take into account technical analysis, fundamental analysis, sentiment, and the macroeconomic situation. For example, tariffs, wars, trade wars, stop loss, take profit data. And I'm risking 1% on one position. So 1% on the SPX, 1% on the 1% on a major currency pair. So yeah, basically these are the results. This is the funded account of DNA. There are some conditions. So I need to have minimum trading days, 3 more trading days. Then there's a cooldown period of around 13 days and 16 hours. The minimum balance must be 50,125, and I need to close all open positions. So these are the things I still need to accomplish. If this number hits $300, I will most likely close the 2 trades running, because I just want to get the first payout for a video. If I'm being honest, I want to make a video where I reach a payout by only using ChatGPT and trading a funded challenge. So it doesn't matter what the size of the payout is. I would just like a payout for the video. If you want to get a DNA funded challenge, I've had very good experience with the company. I love the trading software that they use. So if you want to get a funded challenge, you can get 25% off with the code A1Live. Okay, so A1 Live gets you 25% off any DNA funded challenge. Now, this code is specifically for you guys watching the streams. Usually it's a 20% discount. This one is for 25. I highly recommend you guys check out DNA Funded. They use TradeLocker for software execution, and it's a great, great software to use. Now, getting to the charts. So S&P seems to be crushing higher today. What is the DXY doing? DXY seems to be kind of break even on the day. NASDAQ pushing higher. Silver exploding higher, not even getting close to my entry level, so that's not the best. Gold seems to be up on the day, and my two positions, euro dollar is a bit flat on the day, but still running percentage, and NZD USD is doing pretty nicely. So by the way, these two trades were a signal in the A1 trading Discord. So if you want to check it out, definitely join the Discord. Let me see what you guys are saying. So let's see. News. Okay, we'll take a look at news. Dollar sell. I'm taking my whip for a spin this weekend. What kind of a car do you have? Is it like rear wheel drive, so you can maybe do some drifting in the snow? Let me know in the comments. I just noticed it's the September PCE, so no one will care about it. Yeah, basically it's September numbers, I believe, as well. So not gonna move the markets much. Thank you, Robohola. Thank you, Cedric. Thank you, Aaron. Thank you, Sluggy. Thank you, Josh. Thank you, Fantasia, Bazaar. What is your take on the news that just dropped? I'll go for the news right now. I crashed my whip, says Otmain. I just had a chat with DNA. You can't do it's considered hedging, can't buy and sell Euro USD and the NASDAQ. Oh, I might then have to look into that. Yeah, that could be an issue. So I'll see about that. Then Brian snitching on Marco. So I heard something about it that they don't allow some sort of hedging. I will research that a bit more. I'm wondering when are they going to ban trading from ChatGPT? I mean, look, the whole experiment, I wouldn't put real money behind it. So I have to be honest, the whole experiment is just for my YouTube channel and to get some clicks, because I thought it would be pretty entertaining. I thought it would be pretty fun. And so far, it's been getting some pretty good coverage on my YouTube. So I know some of you will see this and say, let me try to replicate the whole thing. Well, you can, of course, do it, but I would say be very careful. Okay, so be very careful with doing that and don't risk too much. I'm not putting real money on the line. It is just a 50K challenge. It's, I think, $200. So it's not a huge loss if I blow the challenge. And it's mostly for clicks and creating content, if I'm being honest. My real trade signals are made from technical analysis, edge finder, fundamental analysis, sentiment analysis, seasonality analysis, and the real signals, I have real money on the line. So I'm trading them with my personal capital, okay? That's what matters the most. These two trades matter the most. The buy on euro dollar and the buy on NZD USD. That is what is important. But it's pretty cool to see ChatGPT doing so well. And I will keep doing the experiment. I have a whole journal in Notion where I input the trades I've taken, and then I'll definitely just continue trading it until there's a massive drawdown. So we will see. Okay, let's see. You're gonna talk about CPE or just yap? I'm just gonna yap. Pros don't like profitable things. Props don't like profitable things. Yeah, I mean, the business model with a prop firm is if you win money, they lose money. They're not taking your trades. You're getting demo accounts. It's demo money. It's like a casino, but with a casino, the house has the edge. While with trading, you can have the edge if you're a good trader. If you're in the A1 Discord, for example, then you can have a pretty good edge in the markets over other market participants, and that way you can make money. So you can make money on prop firms, but you have to know that they don't want you to make money. You know, it's like a casino. Casino doesn't want you to make money, but the edge is different. In a casino, the house has the edge. With a prop firm, if you're a good trader, you have the edge. Okay. Let's see. Never buy and sell the same USD asset. DNA considers that hedging will remove any profit from it. That is interesting to note. I will look into that. So I may need to actually look into that a bit more. Marco, you need to be a DNA ambassador. Okay. So let me know if you guys have any chart requests. I'll keep my car private. No flexing here. Yeah, you don't have to give me the brand. You can just tell me, is it front wheel drive or is it rear wheel drive, so that we know what you're working with. You don't have to give out the brand. I do love rear wheel drive cars because front wheel drive is just so boring. And with rear wheel drive, you can actually slide it in the rain and in the winter, in the snow. That's the best thing ever. Okay. What's up, Marco? How can I find out which brokers are available on TradeLocker? I think it's best if you just type in TradeLocker in your browser. Okay, I think that's going to be the best. Just go to their website. TradeLocker has a website, and then you will see all of the brokers that they support. Thank you, Tony Stark. Merry Christmas to you as well, and happy holidays. You have been reported for giving out financial advice. This is not financial advice. Just a disclaimer. Yapping with Mario today. Damn, the comment section is on fire today. GBP pairs, maybe, Marco. Yeah, sure, Sluggy. Sure. We can take a look at the pound pairs. Let's first do a little bit of analysis. And also, let me not forget to go through the news. Core PCE, preliminary consumer sentiment, preliminary inflation expectations. So what do these numbers mean? Well, Forex factory calendar is great because you have this small button right here. So you can see exactly what it is. Measures, change in the price of goods and services purchased by consumers, excluding food and energy. It came in the same as the forecast. It came in the same as the previous number. So pretty much there's no major edge behind this. So the movement is not going to be drastic. Consumer sentiment, level of a composite index based on surveyed customers. Consumers' actual number is greater than the forecast, or when the actual number is greater than the forecast, that is good for the currency. So essentially, this came in higher than the forecast, and it came in higher than the previous number. So it should be bullish for the dollar. With the inflation expectations, we have a lower number than the previous number. There's no forecast, but it's a lower number than the previous number, which means, see the usual effect, that actually means this is bearish for the USD. So if we go to the DXY and we go to the 1 hour chart, okay, or let's go to the 5 minute, you're actually going to see the dollar on this news, let's say, or after this news, this was the news, Well, I can't say there was a much reaction because we pretty much ended up where we opened on this 5-minute candle. So the reaction is minimal. The reaction is pretty much a nothing burger on the DXY. The next big news event that we have is going to be next week. It's going to be the Fed interest rate decision. See, federal funds rate, projections, statement, and the press conference. This is going to be a big one, the projections. So we're wondering, what is their plan for 2026? What are they planning to do in 2026? Okay. They're going to release these projections, which should give us they should give us a good idea of the actual path of the funds rate. Okay, so that could be a pretty important thing to look at. As far as the funds rate goes, I think there will be a cut. The forecast is for a cut. Fed Watch tool, most likely they're going to cut interest rates. I mean, the Fed is just getting more dovish every single week. The new Fed chairman, who is going to be replacing Powell, will most likely be dovish as well. Okay, so he's a Trump he worked with Trump before, I believe. Trump knows him very well. He's going to respect what Trump has to say. And do you know what Trump has to say? Rate cuts. So Trump wants rate cuts. Fed super dovish. If you look at all of the Fed members, most of them have become dovish. Most of them are planning for a rate cut in December. So that's what's up. Okay. Is that good for the markets? Well, if you're a trader, I think it's pretty good. What does it mean? It means a higher stock market, higher S&P, and a lower dollar. So if you're an investor, that may be good as well because your assets will appreciate. But for the general person living in the United States, it's bad because the dollar is losing value. So most people don't have their money in crypto or in stocks or in any sort of an investment or in gold or in silver. They have most of their money in cash, in dollars. So their purchasing power goes down. Basically, the rich get richer while the poor get poorer. And if the US administration is controlling the Fed, that's a recipe for disaster. The Fed was always supposed to be a separate entity, controlling the employment, controlling the inflation. But if Trump gets his hands on the Fed and installs his own, let's say, puppets in the Fed, not a good thing for the general person living in the United States, because inflation is going to eat you alive. So if you haven't already, not financial advice, but long-term, maybe you should consider parking some of your money into the stock market. Even at these prices, it's a better option than having your money in dollars. Again, not financial advice. That's what I'm doing. You don't have to do it, but that's what I'm doing. That's what Nick is doing. That's what Chris has done. That's what James is probably doing. Ivan as well. That's just the game. If you're not present on the charts, inflation is going to eat you alive. So the pound pairs, we talked about the pound, or we started to talk about the pound. Let's first check out the Edge Finder. So let me see. UK. Only 33% of the data is coming out better than expected. So the short-term data is pretty bearish on the pound. One thing that's new in the Edge Finder, which I like a lot. Where is it now? Has the name changed? Okay, this is it. This is kind of the macro matrix. So this shows you the long-term data. The UK is at number 5. Okay, so the UK is at number 5. Not the best. I would say both long-term data and short-term data are pretty bearish. I can also show you some trends. Look at the GDP trend. GBP. Negative all over the place. Look at the unemployment. Rising unemployment, I think, 5%. So definitely rising. It's on an uptrend. Pretty easy to spot that. Inflation. Let's take a look at inflation. GBP. 3.6%. So inflation is also way above target. That's called high inflation. It's even higher than the United States. So short-term, long-term, I'm bearish on the pound. A cool pair is Pound Aussie, which, oh damn, it just keeps going down. I got stopped out on this one, unfortunately, prematurely, with this huge wick. Would be running some percentage right now, but hey, that's the game. So I think this is one of the better opportunities out there, selling Pound Aussie. Selling Pound Dollar is, in my opinion, not the best thing to do, because the dollar right now is pretty weak. I'm pretty bearish on the US dollar, especially with the dovishness from the Fed, especially with the massive rate cuts that are incoming. So Pound Dollar, I am leaving alone. I think you should structure trades, especially in Forex. You should use a strong currency and a weak currency. So the pound right now is a weak currency. Well, pair it with a strong currency. Rather than Pound USD, GBP AUD might be better. GBP AUD. If we run it through the top setups page, let's see. Let's see GBP AUD. Very bearish reading. That's great. That's a great confluence to sell. Let's see GBP USD. Neutral. See? So this is a neutral reading. Let's see GBP CAD, for example. Neutral, GBP JPY. So I would pretty much do what the Edge Finder is saying. You know, the best pair would be GBP Aussie. I'm not actively looking to sell it because I already got stopped out, so it left a bitter taste in my mouth. I don't want to get back in again. Maybe I should have around the 20 MA. Maybe I should have considered a sell entry. But now it's running, so I cannot just chase the price. If you want to get the Edge Finder, I use it daily. It's one of the main confluences of why I take positions. So if you want to get this software, we are running a massive sale. I think it's still 45% off with my code Marco. And also this code works to get a massive discount on the A1 Trading Discord, where I give out trade signals alongside Nick, James, and Iwind. So, example, this was a signal. This was a signal as well. Both trades running pretty nicely, pretty healthy percentage. Okay, let me get back into the comments. I'm really happy that you guys are super active today. That's great to see. I love you too, Bashi. Just trade the final account like it's a real account and don't risk to make quick profit with FTMO. They won't ban you. Yeah, I'm also trading FTMO. I have 2 accounts from like a year and a half ago, and I'm just using 0.5% or to 1% per trade. So that's my risk. Those are my risk parameters. How do you place entries with ChatGPT? Is it automated? No, it's purely manual. So every single day I just go to the prompt and then I ask ChatGPT to give me a trade signal for 2 trades. What is pretty funny, today I got this. I'm sorry, I can't continue giving specific buy-sell levels because it falls under regulated financial advice. So we can continue the game, but we have to continue it in a simulation form. I already told ChatGPT that it was a game. I'm not sure why I had to repeat it, so I just wrote down, yep, let's do a fully simulated mode. Okay. So that was kind of a shocker for today. I can't help but picture you with a ponytail, Marco. You should give it a shot. Well, maybe once I'm like 40, 50, and I go a bit crazy from all the chart watching that I've been doing. When's the Bassett guy starting his job as Fed chair? He still hasn't been voted, so Fed chair, Polymarket. This is a great website you can look at. So on Polymarket, you have these bets. So Kevin Hassett, there's a 73% chance that Kevin Hassett will be the new chairman. We thought it was going to be Waller, but it's not going to be Waller. It's probably going to be Hassett, but it still hasn't been officially announced. Now, Hassett is a dove. asset is pretty dovish. So you know what that means. I pretty much explained it. The Fed won't be the same without Powell. Yeah, Powell. I do like Powell. I think he's a genuinely smart guy, decent guy. Doesn't take crap from Trump. Doesn't just follow rate. Doesn't just do rate cuts because Trump wants rate cuts. So I have respect for Powell. He's a good guy. In the land of crooks, I would say, because most people in politics they don't have the pure motivation to help the country. They want to help themselves, if that makes sense. Make him look like a Ukrainian gang member. Does the Edge Finder have a manual tutorial that explains all of the functions? Yes, on the website there is a tutorial, and also Nick has a bunch of videos on it. A great video that I recommend everyone to see from Trader Nick is explaining my trading strategy. He made the video, I think, 1 year ago. It's like 40 or 50 minutes long. It's a great video, and it heavily uses the Edge Finder. So you can see exactly how Nick is using it, and that is exactly how I'm using it as well. What percentage do you have available in cash? How much do you have in stocks and other things? Well, a good split, I would say, a good split is, let's say, 30% crypto. Then you can do, let's do 25% crypto, 25% metals, and 50% US stocks. I think this is a good split. Okay, you get a little bit of everything, but you focus on US stocks because historically it has been the best performer. I don't keep a lot of cash. As I keep getting income through the months, I just invest it in stuff, or I buy a funded challenge, or I buy some Bitcoin, or I buy some S&P, or I spend it on some crap that I don't need. So I don't keep a lot of cash. Maybe I should keep a bit more cash, to be honest. ChatGPT didn't like you passing the DNA funded. Yeah, probably. They tried nerfing ChatGPT, but it's prone to level 1 deception. Yeah, it's pretty funny. We'll see what happens. I mean, it's not a serious endeavor. It's an experiment. It's a challenge. It's supposed to be fun. I'm supposed to go here on these streams and show you guys the performance. I didn't think it was going to be so good, that the performance is going to be so good, but hey, better for me, better for my videos. But it's not a serious endeavor, so you shouldn't put a bunch of money behind ChatGPT trade signals. I mean, it's ChatGPT. It's a robot. Okay, so to wrap things up, I'm gonna go through my watch list for today, for the next week as well. The Nasdaq, I want to buy. I do want to buy, but we're almost back at all-time highs. No sense for me to buy here. I'm happy with the positions they have running, so I'm not gonna touch the Nasdaq here. Silver for me, I want to buy it. I'm still interested, but I want to see a pullback. So, as I told you, inflation will most likely go up in 2026. It'll go up even in December. The dollar is supposed to keep losing value. As the dollar loses value, silver should go up. That's the way things work. That's the way correlation works. So I have my alert here, and that is the level where I would like to buy, around 54. It's near the 20 MA on the daily chart. It's near a large support, but we just cannot pull back. And that is something that silver has been doing this year. Just huge moves up with minimal pullbacks. When we finally do get a pullback, I actually did get in, but unfortunately I got stopped out by a couple of points, and then the price exploded higher. So got unlucky there. I'm looking for a new entry, but I'm looking for a pullback. I won't chase the price. I won't just buy here because there's no pullback. I'll wait for a pullback first. Euro dollar, game plan is to trail my stop loss, so to trail this position. running some okay percentage, but NZD/USD is even better. So NZD/USD looks super healthy. I'm also looking to trail my stop loss. I think the dollar weakness continues. Okay, so I think the dollar weakness continues in December and in 2026. And I think these two currency pairs are good to hold. Although it's negative swaps, you know, if you jump to your edge finder, you go to the carry trade scanner. Unfortunately, if you're selling the dollar, you're paying negative swaps. So see, for USD and NZD/USD, that's an extra cost, extra expense that you have to think about. For me, it makes sense. I'm already up a good amount of euros, and the swaps are not a big chunk of it. So the swaps are a minimal part of it. So I'm okay with negative swaps. I'm okay with holding these positions. My favorite currency pair would be NZD/USD right now, because the central bank, the RBNZ, has flipped from being dovish to hawkish. If you look at the NZD interest rate, you're going to notice that this thing was on a massive downtrend, and now there's a pivot. There has been an event recently, the RBNZ meeting, and they have stated that there will be no more rate cuts most likely, and that they may get more hawkish in the future. That's a pivot. That's great for the value of the New Zealand dollar. See, massive downtrend. Now it's time for us to go up, maybe. That is the bet. And pound Aussie I like as well, if I'm being honest. What is crypto doing? Crypto is just doing nothing. It's a crypto winter right now, in my opinion. I'm not touching crypto at all. So the last thing I want to cover is the pound Aussie. Pound Aussie, unfortunately, I didn't sell it around the 20 MA. Maybe I should have. It is what it is. I'm not going to chase, but this was probably a good entry. So I think NZD/USD, Euro dollar, and selling the pound Aussie, which has a really, really bearish reading on the edge finder, very bearish, that's good. That is high probability. Thank you guys very much for watching. Good luck in the next week. I will be streaming most likely every day next week. And yeah, that's it. See you in the next video. Goodbye.
Thank you for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want to get put on the nice list this year? Then make sure you check out the A1 Stock Box. That's all for today, everyone. We'll see you tomorrow. Ho, 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 ho.